In May 2009, they called this man crazy for saying that gold could go up from $900 to $15,000 an ounce.
And that puts, for gold for history to repeat, and gold to cover the same portion of the currency supply that it covered back in 1980 and back in 1934, gold has to go over $15,000 an ounce today. So no, the answer is the cycle has just begun.
Well, 16 years later, gold stands at $4,180. Matter of fact, this year alone, gold rose more relatively than the S&P 500 or even Bitcoin. So this little precious metal is so valuable. But why? Gold has been a valued commodity for almost all of mankind's history. And people love to hold on gold because it has proven to outperform inflation at least for the last 45 years. And one reason for that is its scarcity. To underline how scarce gold really is, a famous YouTuber called John Harris tried to visualize it with this well-made section.
We took all of the gold that has ever been mined in all of human history and put it all in one place in a giant cube here in Washington, D.C. It would look like this. Oh, this is it. I mean, it's pretty big, but I kind of thought it was going to be a lot bigger.
But that's not the only reason, there's much more to it, and to understand this, we have to dive into the world of currencies and trade. Emmett Siri, a professor of finance at Stanford, says that the US is in the midst of a credibility recession. And it's true, people from all over the world have lost trust in their governments, in the currency, in the banking system. And in the midst of all that crisis is the US dollar. Morgan Stanley research estimate that the US dollar could lose another 10% by the end of 2026. The US dollar was the #1 worldwide when it came to trade. Almost every international trade was made in US dollars, even when the US wasn't part of the deal. And that's also one part of the story why the dollar is depreciating so much at the moment. Look at this graphic from JP Morgan over here. If you watch the gray bar closely, you can see a decline from 65% in 2016 to around 57% as of 2024. And if you now take a look at the dark blue bar in the chart, you will see that in 2016 it's almost a line, but from that it grew bigger and bigger. That's the Chinese yuan. And what really underlines this trend is that the first time ever in history, a yuan-dominated financing cooperation between two countries, China and South Africa, was signed. The loan is worth 2.1 billion yuan, which is roughly 290 million US dollars. This seems only like a small taste of what's more to come from the BRICS states. So Brazil, India, China and Russia were the founding states, and in 2011 South Africa joined. And over the years more and more nations joined, like Egypt, Ethiopia, Iran, Saudi Arabia, UAE and Indonesia. The reason for that is simple, as the US strikes more and more with tariffs upon these countries, and in return they try to avoid the US dollar to reduce their reliance. And US President Donald Trump acknowledged the threat, as he said in July 2025 that BRICS was set up to hurt the dollar, and that one of their main goals is to take it off as a standard. When you look at it, one of the main reasons why the dollar is so successful was also the power the United States had, and that also partly due to their heavy gold reserves. 8,133 tons makes them the #1 nation when it comes to gold. And here comes the but. This number hasn't changed for almost a decade. As you can see in the chart over here, for the last 10 years, the level of gold in the US didn't change. What was heavily discussed in the media was China's gold rush this year. But what many people don't see is China is almost for the last 10 years stacking up their gold reserves. You can see their vast development in this chart, starting from 2016 with 1,800 tons to around 2,300 tons as of 2025. Although only China was heavily discussed in the media, not only them are stacking up gold, also other BRICS nations are doing it. These are the top 10 nations that hold gold at the moment. 3 of them are BRICS nations, Russia, India and China. Plus Japan and Turkey have also expressed keen interest in the BRICS. This would mean half of the top 10 list of nations that own gold worldwide will be working together to ditch the dollar. All these trends in global economy leaves banks, investors and whole countries with uncertain portfolios. This can be seen throughout history as well. As the dollar gets weaker, gold becomes stronger. Let me show that to you with data. Look at this inflation-adjusted gold chart for a moment. Back in 1980, gold hit its first major spike, around $2,500 an ounce. But what you can see after that is once the dollar stabilized, the price of gold dropped heavily. Between the 1990s and the 2000s, the value of gold dropped almost to the level of the pre-crisis. The same behavior we can see in 2008 during the financial crisis. Gold surged again as fear dominated the markets. But just as it began trending downwards, the world got hit with another crisis: COVID, tariffs, wars, and every one of these shocks pushed gold even higher, creating the new record we see today. Although it's often claimed that gold has a variety of applications, the demand in 2024 just shows you that above 90% is demanded from jewelry, investment and banks. So this makes gold very dependent on this sector. Let me try to explain this whole situation to you with an example from the past where Mansa Musa, the richest man ever recorded in mankind history, had to realize on his pilgrim back from Mecca that although he owned a lot of gold, it was worth nothing. So everyone knows today that if there is too much of anything, its price and value will drop. On his pilgrim to Mecca, Mansa Musa crashed the whole economy of Egypt for more than 10 years, after just staying 3 months in Egypt and spending vast amount of gold. But to his own surprise, on his journey back, he found himself with no money. What happened was simple: the excessive flood of gold during his 3-month stay led to significant price drops in value of the gold. So the richest man ever had to borrow for himself money to get back to his own country. And that whilst he still had a proper amount of gold with him, but it was so devalued because there was too much on the market in Egypt. Basically, it made gold like every other ordinary metal. Let's try to draw the conclusion to today's economy, where all over the world people are trying to buy gold at the moment. It will inevitably result in a saturated market. And here comes the key point: gold has never been proven to stay in an upward trend. History just shows that after every spike, it eventually cools off. And the reason for that is simple: it's human psychology. During crisis, when people lose trust in markets or currencies, they run for gold as the safe haven. But once the panic fades and the local currency starts strengthening again, gold looks less attractive. Because basically, then other investment alternatives start offering better returns, so the masses rush to the next opportunity. And as of right now, we are on the top of that fear cycle. I know from my own experience as a business engineer that financial literacy can be a tough challenge. If you're just starting out and you want to understand everything about finances, what's important when it comes to personal finance, let me know in the comment section down below. And from my point of view, starting a business, making your own money is always the better choice than chasing the next hype cycle. In this video over here, I will share with you 5 business ideas that you can start today working from home with zero invest in a market that's not saturated already. Now be real, would you invest in gold at the moment, or would you rather start your own business and make your own money? As always, thanks for watching, see you in the next one.